Sean Winter, Executive of Alternative Investment Services within RisCura, a purpose-driven investment firm. Although we have a truly global footprint from London to Washington to Hong Kong, the company has deep roots in Africa, and we made the strategic decision to set up a Mauritian office in 2016. Mauritius remains a preferred destination to set up private equity funds, and this was the primary reason for us creating a center of excellence focused on independent valuations and due diligence to service these funds. Through our global networks, we have seen that independent valuations are increasingly essential to bridging information gaps between investors, funds, and portfolio companies. Our report affirms that Africa remains an attractive investment destination, but requires enhanced economic reforms, good governance, and a stable political landscape to continue attracting PE fundraising and entrepreneurs. The global pandemic has accelerated e-commerce in many parts of the world. Investment activity in the continent's IT sector experienced significant growth of 49% from 2020 to 2021. Coming to Mauritius itself, the report makes clear that according to the UN Conference on Trade and Development's Business to Consumer e-commerce index of 2020, it ranks within the top 100 of the index globally. Altogether, Mauritius is well positioned to leverage this development given the solid platform developed by the EDB and the Mauritius African FinTech Hub as a fast-growing ecosystem where entrepreneurs, corporations, governments, and investors can collaborate to build cutting-edge solutions for the emerging African market. Another interesting finding with the recent launch of the first green bond issued in Mauritius is that of the African PE funds raised in 2020, $498 million, or 38%, was allocated to impact fund managers, a significant increase from prior years. Mauritius has already firmly established itself as a gateway for investment into Africa through its robust banking, taxation, fiduciary, and fund management infrastructure. The recent removal from the FATF's grey list marked the end of a very challenging period for the financial sector within Mauritius, management companies included, and has precipitated tighter regulatory supervision and fostered a compliance culture. Management companies have made remarkable efforts to ensure that Mauritius is back on the whitelist and continually invest in staff training and education to ensure that service levels are globally competitive. Many of these management companies have set up outsourcing centers to service other jurisdictions within their group structure, and this is a testament to the local workforce's excellent financial and business acumen skills at globally competitive costs. Through our interactions with various management companies on the island, RisCura has observed a genuine passion for continually customizing client-centric solutions and constantly striving to improve service levels. Private equity markets continue to exhibit their resilience through 2021. The provision by long-term investors of additional capital to support underlying companies has resulted in a number of PE investee companies reporting strong post-pandemic earnings improvement. Impact investing and an increased appetite for investment in tech and infrastructure projects will also drive PE growth over the next 2 to 3 years. The post-pandemic growth of the PE assets is likely to face headwinds though, due to geopolitical risks presented by the Russia-Ukraine conflict, Particularly consumer-facing companies must now contend with reduced purchasing power of the consumer as a result of increased inflationary pressures. We may therefore see moderated growth for certain subsectors of PE markets over the next 2 to 3 years.